All right, guys. Well, welcome. Thank you so much for thank you to David and Anka and the Synergy team for having me on. Always really humbled and pleased to be invited to these events. I know there's a lot of great speakers. Hi to Mr. John Thomas. Been a while since I've seen you. Hope all is well. And so I do appreciate everybody tuning in. I know there's lots of good, solid content over this 3-day event. My name is Silas Peters from Trades Trending, and I love this workshop. It's called My Top 3 Secrets to Being on the Right Side of the Market. And I can almost guarantee that you probably have not seen anything like this before. And we're going to have a good time, and we're going to be I'm going to be interactive. I cannot wait to show you something that we've been working on really for just over a year or so now. We are in some exciting times, some truly incredible opportunities, not only now, but also on the horizon, especially considering where we are, the election year, lots of events globally that are taking place that we can take advantage of in equities, commodities, currencies, ETFs, and more. Now, before we begin, let's cover the risk disclaimer. We know trade is risky. There's absolutely no guarantee past performance is indicative of future results. So it's always consult with your tax or financial advisor before applying real risk capital in the markets. So now that you understand that, let's talk about what we're going to be covering today. We're talking about using a trading compass to know exactly what to trade and when, how to define worst case scenarios in any trade, long, short, or out, how to use AI to get the trend, and as our good friend Kenny Rogers said, know when to hold them and know when to fold them. Plus, my big promises to you is that you will learn to get your time back. And not only that, you will discover a totally different way to trade, a much easier, simpler way to trade. In fact, my number one goal for you is by the time you leave, is that you'll have an easy 3-step trading framework that you can use literally every day. My job is to make you an informed trader and investor. And I want you to be skeptical. But to give you a quick taste of what we'll be exploring together, I want to show you a handful of case studies using the power of this framework, because as they say, seeing is believing. This is a chart of BRP Group. I really do not have any idea that you did not know what this stock either or where the market was heading. You probably would have said, well, higher. We look at this trend. The market is heading higher, as indicated by higher lows, higher highs. But our predictive modeling is suggesting a near-term top. And that is precisely what happened. BRP made an interim top and went south to the tune of 16.4%. Let's look at a boring ETF, XLP, or consumer discretionary. You can see here that this market is in a severe downtrend, but our predictive modeling system is predicting a bullish forecast ahead in a severely downtrending market. So what we do is come in here and safely catch this falling knife, and the trade rides higher for a little over 15.2%. What about JP Morgan? This is right in the midst of bank earnings season. See, the market is rising, but our model is suggesting a bearish forecast ahead. Bearish forecast looming ahead. What happens? The market decides to make a U-turn and trades nearly 30% to the downside. TLT. Everybody remember the poor bond market last year getting absolutely pummeled. But what if you knew our highly predictive AI technology says not so fast, we're likely going higher and doing so on a specific date? This is where you step in, safely take a bullish position, while everybody who just took the momentum trade and sold the lows are now getting a face pill. Now, you guys are here more than likely because you're looking to supplement your income. But what if you could place a trade in TLT and generate an extra $4,500? How would that make an impact in your life? Type in the chat box, what would you do with an extra $4,500 this month? Because I want to know your why behind being here, why you trade. Are you looking to retire? You're looking to take that family on vacation you've always wanted, or any situation where you now have to take care of a family member or loved one. So I see the answers and they come in time and time again. Now, what if knowing the precise time to build a long position in Netflix right here do for you? How about placing a trade such as buying a 100 shares or buying a batch of call options that generated a little over $14,000 and took you less than 5 minutes to identify the trade, frame the market, find your entry, and then let it rip? What about this trade in crude oil? Moving sideways here, doesn't have any clear direction, kind of choppy, kind of noisy, but our predictive forecast model says we are at a significant turning point. And if you followed its lead and took a long, you had the opportunity to turn one contract into a little over $24,000 with little drawdown. What would you do with an extra $24,000? How would that impact your life? You think if you are a trader that generated those kinds of results, your life might be a little easier. So let me tell you why I trade. I trade for one reason and one reason only, and it's called freedom. I trade because this software enables me to locate and execute results like this. $22,000 off of the downturn in crude, and that's coming off the $24,000 per contract trade to the upside. Who cares if a market is going up or down? We trade the up moves and we happily trade the down moves over and over again. And I trade because it's the best vehicle that affords me the ability to be a better husband, a better father. When I can generate results like this, it allows me to be present. So I'm going to ask you, is this training for you? If you are sick and tired of spending countless hours researching what stock or ticker to trade, this training could be for you. If you're frustrated feeling like you're deciding direction of a trade based on a coin toss, this training could be for you. If you're done with being a dollar short and a day late when it comes to being profitable in the market, this training could be for you. And my goal is this. I see your whys in the chat. I know what I'm going to share with you today truly has the ability to make a huge impact in your life. I want to make this training worth at least $3,000 for you. My only ask is that you treat it like you paid $3,000 to learn what I'm about to share with you. And if you stay until the end, not only will I share with you my top pick right now, but I'll also share with you how you can get exclusive access to my personal and proprietary Trend Insider software that allows me to generate the results I shared with you already, as well as throughout the presentation. So type in your number if this is something you'd be interested in, to have the tools, the skills, the knowledge to be on the right side of the market. Now, who is this guy that's been going on for the last 10 minutes? For those of you who don't know, my name is Silas Peters. I'm a veteran trader who cut my teeth at the Chicago Board of Trade. Now, I've traded some of the biggest markets for hedge funds, banks, commodity trading advisors, but more importantly than being a trader, I'm a husband to my college sweetheart and a proud girl dad to two beautiful daughters. And trading affords me the ability to live a truly blessed life where I get to live at the beach, travel, and most importantly, be present. Now, I have had the honor of teaching thousands of traders just like yourself who've gone on to achieve some great success stories in the markets. Stories like Bruce, who made some money on the stock I recommended, Merle, who sold DVA and made money, Mark and Andrew and John, and all these stories that come in every single week. Another student who made money using my techniques on the TQQQ, upside and downside. Andy, who made back his money in less than a week. Philip, Lee, James, on and on and on. This one here, Ernest is now able to fish. And this is really the ultimate compliment because he's taken action with what I've taught him and is now fishing. And then you have David, who said that one trade paid for his membership. And then you've got Stan, who made 100% in an option in less than 2 trading days. Now, look, my results are not typical. This is not some get-rich-quick scheme, and it's not just effortless earnings. My results are not typical. In fact, I put in the work and I've taken action. And if you listen closely today, this is what you'll discover. You're going to leave this workshop with an easy 3-step trading framework that you can use every day that will save you hours and hours from being glued to your charts. In fact, during this workshop, I'm going to show you exactly how I find a trade, get direction, find entry, and get my risk to reward and place a highly profitable opportunity in the market, all in under 5 minutes. Now, before I do that, let me ask you a question. How many of you have felt like this before? You start your day off feeling great. You slept well. You made your hot cup of coffee. You woke up with the love of your life who's made a great breakfast. She already has on your morning financial market show running in the background and has laid out your fresh edition of the Wall Street Journal right in front of you. Just ready for you to find your next golden nugget that's going to make you massive profits in the market. After breakfast, you move to your home office, you sit down at your incredible trading workstation with your triple monitor setup with all of your different charts, and before you know it, you've got over 100 tabs open and you're looking at over 100 stock symbols. Uh-oh. You are now left mind blown. You're left frustrated. Why? You don't know where to begin. You're overwhelmed. You're flying blind in the market. What is one of the reasons? Why is this happening to you over and over again? Well, think about the sheer number of markets to analyze. Did you know that at the end of last year, there were over 7,750 stocks listed on the New York Stock Exchange, over 4,400 stocks on the NASDAQ, and over 2,000 stocks listed on the Shanghai? Doesn't even scratch the surface of the tradable names listed on the OTC pink sheets, Canadian, German, London exchanges. Doesn't even include the 100 plus commodity futures markets, 100 plus foreign currency, commodity, other liquid, illiquid, REITs, MLPs, preferreds, fixed income, crypto spreads, and more. In fact, you're looking at over 245,000 instruments. No wonder 97% of average everyday traders and investors start off behind the 8 ball. No wonder you are sitting there every day staring at the charts with glazed eyes. No wonder at the end of the day, week, month, you likely have little to show for your time and effort. Well, what if there was an easy button? What if you were able to filter 245,000 symbols, say down to 5, with one click of a button? Not just a random 5, but 5 of the top markets ready and set to make a move. That's the first line of business that we're going to be covering today, to know exactly what we will be trading. If you spent 30 seconds researching each ticker of the New York Stock Exchange, NASDAQ, Merck, London Stock Exchange, it would take you almost 4 days, 19 hours, and 56 minutes. I asked my programmers to do some research and let me know how long it would take to manually scan the New York Stock Exchange for stocks that fit our criteria. I was shocked when they came back with a crazy high estimate of 4 days and 19 hours. Here's why. As I said before, there's over 7,750 stocks listed on the New York Stock Exchange alone. Tossing the Dow, NASDAQ, other exchanges, it's pretty much impossible to have the best stock list without using technology. So what if we leaned on the power of the machines to take that 4 days and 19 hours and whittle it down to a few clicks of the mouse? And that is what we did, using the power of technology. I had a program built that eliminates me, takes me out of the equation, totally removing the human error side of things, spitting out top-ranked trade ideas based on AI data, and it has totally changed my life. Only 8 seconds every day to know the stock and ticker symbol that gives you the best chance to generate profits in the markets, where you get the symbol, you get the direction, and you get the strength number ranked in order from best to worst. And it's not just for stocks, because I personally love to trade futures and commodities, grains, gold, crude. So I had it built for those markets as well. Same process where you get the symbol, direction, is it a buy or a sell, and you get the strength ranked in order. And it even works in Forex, where you get the ticker, you get the direction, and the order of best to worst ranked with a strength ID to help you see which has the potential for the strongest move. By using the power of our predictive AI forecast model, we can easily, with a glance, spot the highest opportunities for markets that are about to move. Can we all see and agree that we should be buying here? We should be selling here, buying here, selling here, buying here. This is exactly what our software does. Now, I want to do a quick poll. Who here has a checklist that they abide by before entering a trade, or a checklist they may use to qualify a trade? Type in a yes, a no, or a maybe. Who has a checklist that they use? Successful traders, businessmen, leaders all use checklists. Good checklists are precise, they are efficient, and they're to the point. And they're easy to use even in the most difficult situations. So let me see where everybody is. Pretty much everybody has a checklist. A couple of no's, and that's fine. But let me tell you why. Checklists do not try or do not need to spell out everything, but provide reminders of only the most critical and important steps, ones that even the most highly skilled professional using them could miss. Good checklists are above all practical. So where am I going with this? Your 5-step trades should look like this. As I said earlier, successful traders use a checklist, and here is mine. Write this down, take a moment, screenshot. Step 1 is to find your top markets. Step 2 is determine direction. Step 3 is frame the market using higher time frame analysis. Where has it been? Where is it likely headed? Timing our entry, and then we're going to come in and manage our risk, manage the trade. And there you have it, my simple 5-step checklist. That is rinse and repeat on a daily basis. So since we've discovered how to find our top 5, step 2 is direction. If we do not know direction, we're pretty much flying blind. We have no business even considering being in the market. We have to know directional bias, because with a directional bias, we are now like a pilot. Imagine being a pilot. You're circling the airport in Aruba, waiting for bad weather to break so you can land. Your instruments are saying that you should be able to touch down in roughly 12 minutes, but the weather is very, very bad below you. Borderline tropical storm conditions. When your gut says leave, turn that plane around and just leave. But as a pilot, you don't fly around weather based on your gut or instinct, because you've done this thousands of times in your simulation exercises. It's basically in your blood, ingrained in your DNA. You don't panic, you use the instruments. And trading is the same way. You have to have the best instruments to keep you from making mistakes. If you're jumping into markets without the proper tools, the instruments, the compass, you're destined to fail. And successful traders use highly accurate, simple instruments that you can trust to help make the right decisions at the right time, regardless of the storms you may encounter. My new trading tool is all of these things. It is my instrument cluster that tells me what to look at, what direction, and the timing of that entry. It's highly accurate, very easy to use, and it is my primary tool that pulls all of the data, the same data I used to spend hours pulling each day. And it gave me back my time. It gave me back my time, and it improved my trading. So the $64,000 question, age-old question, right? This answer is what makes markets. Traders have their opinions. Bulls, bears, fear, greed kick in, long, short, or out. Would knowing what direction you should be trading a financial instrument help you? Would that give you an immediate leg up on where you are now? If not, then it should be a no trade. Pretty simple. You shouldn't be trading if you aren't making direction a priority before you put your money on the line. Without a solid strategy for determining direction, you may as well just be flipping a coin, shaking a magic 8-ball, or go ask a tarot card reader. And no offense to any tarot card palm readers here today. I'm sure you're very good at your craft. But what if there was an easy button? Those were ridiculous examples. We know we're not going to do any of that. In fact, I forbid you to, because trading is a business and we have to take it very seriously. And as you will learn here momentarily, you can have a crystal clear trading plan that you can take to the markets in utmost confidence every single trading day. That is the exact difference between successful traders that you may or may not follow and part-time retail traders who seem to always end up on the wrong side of the trade time and time again. Successful traders have an easy button for nailing market direction, and they lean on the power of technology, having the heavy lifting done for them so they don't have to rely on a coin toss to figure out direction. They already know within seconds is the stock long, short. It's really that simple. The problem is most retail traders fall into is overcomplicating the process. Am I right? Type me, M-E, yes, into the chat if you're guilty of falling into this trap. Let me see. I'm raising my hand. I'm saying yes. I'm saying M-E. All these other people, of course you fall into this trap because we are human. But let's talk about what a trap looks like and how technology can protect you. Let's look at a case study. Go through the process of how historical data can help us make sure we have direction right. In this exercise, I'm going to show you how to remove human error from this critical step in the trade by removing you from the decision-making process. Let's look at a chart of Intercontinental Exchange, ICE. If you look at the past month or two, you can see that it's gotten pummeled. Very bearish. Lower highs, lower lows, and you're thinking this one is certainly going lower. So you're considering a short position. But what if you knew that ICE has been bullish in October for 16 of the last 17 years? What if you knew that it has risen approximately 8.9% over the next 60 days? And not only that, you also know that ICE has been positive 94% of the time with an average gain of 6% over the last 17 years. 17 years. It's a lot of data. A lot of data. But the stock is in bear mode. Would you buy or sell? Stay on the sidelines? Your gut is saying jump in to the short side because you believe it will go lower. We cannot resist our FOMO temptations. So do you short it? Do you buy it? Or would you just sit out? Let me see where everybody is in the chat. Go to the chat box, type a B for buy, an S for sell, or an O for out. Let me see. B for buy, S for sell, O for out. Okay. A pretty wide mix of replies. With all the historical facts I just gave you, remember ICE has gained 94% of the time in the last 17 years with an average gain of 6% during that time frame. Some of you would still be considering a short. I would not. I would be a buyer, and here's my process. Based on the data I have in front of me, I will immediately eliminate sell because the facts are the facts. And as a trader who's relied on historical data to make market predictions that have paid me and my readers year after year after year, I have to go with what history says. And it says I can be long or I can be out, but getting short is not an option on this trade. So let's look at what should happen. This is a chart from my software, Trend Insider. Shows me the history with one click. Why would we want to be shorting right here when the data is clearly pointing to higher prices based on 17 years of data? The market is telling me we should be setting up for a beautiful long entry with low risk and high reward because of what the data is telling us, the data I just shared with you. These are the type of trades that I look for every day. the type of trades we all look for. What I just shared with you gives you an edge. The data, the chart totally removes my bias, my gut, because the law of averages are clearly pointing to the upside. Here's a daily chart of Hormel. If you look at the past 3, 4, 5 months, you can see that it has risen strongly. Very bullish, very bullish. Nice gains, higher highs, higher lows. You're thinking it's probably going to go higher, right? Well, what if you are now at this same time period, you knew that Hormel is actually entering one of the most bearish time periods of the year during a 12-month period. Not only that, but historically, it's realized an average decline of 6.7% over the next 60 days. And not only that, it's been negative 81% of the time, with an average loss of 7.3% over the last 42 years. Almost half a century, 42 years. And so here we are with a visual representation showing 10, 20, and 35-year average price cycles. Do you see how being armed with this data gives you a massive edge? At this cycle peak, right here, Hormel dropped over 24%. History has memories. It can and does repeat. So do you see how we are now methodically heading down our checklist? There's nothing complicated about this. Up to this point, do you see how using a checklist could potentially make you a profitable trader? We have found our market. We've determined directional bias. Now we need to frame the market to time our entry. Timing the entry. Timing is critical for any trader if you want favorable risk to reward. So let's talk about how you could do it. As I said earlier, proper timing is key to ensure your trade has a favorable risk to reward. So let's break this concept down further. We need to start by framing the market. I'm not talking about picture frames. I'm talking about framing the market by looking at the market through a bigger picture lens. So what does this mean? It means that we should start with the higher time frame, because the higher time frames govern the lower time frames. They hold more weight. Take a moment to write that down. Start with the higher time frames. Look at this chart of Lululemon, a monthly chart. We begin by framing the market. We do this by marking out our supply and demand zones. So we have supply here, we have demand, Next, we go to the weekly chart. We want to find zones on the weekly chart that fall inside of the monthly. Remember, we're looking, where has price change trend? Go to the weekly chart. Here we have weekly supply. Here we have weekly supply. Here we have weekly demand. Here we have weekly demand. And then we can go a step further and go to the daily chart that, you guessed it, fall inside of the weekly and monthly. So here in purple, we have supply levels, we have supply levels, we have demand levels, So by buying at these demand zones and selling at these supply zones, we are gearing up for trades that ensure favorable risk to reward. How? Because it ensures that we're always buying at discount and selling at premium prices. Think about it this way. When you go buy shoes or clothes like Lululemon, for example, you want to buy at cheap prices. You want to buy at discounted prices. What about when selling your car or baseball card? You want to sell high, command a high price, which is known as premium. Treat your buying and selling in the markets the same way. Buy stocks on discount, liquidate or sell short at higher prices or premium prices. Everybody here heard of the buy low, sell high concept? Well, that is it. Buy low, sell high, buy low. Let me put this into a non-market perspective. Take a look at this Sam's Club bottle of water. The cost, 75 cents. Look at this bottle of water to the right. Voss, the cost, $7.49. A 90% premium to the Sam's Club bottle. Sam's Club is at a discount. Voss is at a premium. So when we put this back into a trading or market perspective, Just like when buying water or selling water, we want to do the same in the market. Simple principles of supply and demand. So let's recap. Write this down. When we frame the market, we are identifying our battlefield, our playground. We know with a glance that we're always looking to buy a discount or sell at premium. Demand equals support equals a bullish stance or long positions. Supply equals resistance equals a bearish position. We want to look for shorts. So you might want to take a screenshot of this slide because it's a very important concept. That brings us back to our checklist. Who here is finding this helpful? Our simple 5-step framework to making educated and informed decisions. We are locating our top markets, determining direction. We're framing the market to time our entry. Now we need to discuss our risk, our trade management plan. Before you approach any trade, before you get too excited about the actual entry, we must ask ourselves, what is our risk on the trade? What happens when we are wrong? Because we know there are times that we will be wrong. In fact, you should always approach any trade as if you're going to be wrong. And here's how I do it. Write this down. When I'm looking at risk, I don't look at it as a dollar amount. I look at it as a percentage of my account. And every time I'm prepping for a trade and trying to figure out how much money I could make, I look at it as a percent. And it better be higher than my risk. You have to ask yourself this before every new position. Can you afford the trade? Let me show you an example of what I mean. Let's take a $10,000 hypothetical account example. Let's say that my account here is $10,000. My risk per trade is going to be 5% or $500. And let's say that we're going to buy 100 shares at $10. And we're going to use a $3 stop, our $3 risk. So our risk is $300. Our risk is $300 or 3%. Last time I checked is that $300 is less than our $500 max risk, so we can afford the trade. And the bottom line is this: if you cannot afford the trade is too risky. Move on. There's plenty of other opportunities out there. So it's absolutely essential for you to know your risk number. Let's talk about what bad risk reward looks like. What would you consider a good win rate is? Type in the chat box what win rate would make you believe that a trade could make you profitable. Is it 90%, 100%, 50%, 75%? Anything above 30? Okay. What about 80%? 80%. This example, the win rate was 80%. Sounds amazing. Look at the true numbers. Look at the true numbers here. You made money 8 times out of 10, but you lost on trades 5 and you lost on trades 7. Those 2 losing days actually took you net negative. You made $100 on trades 1, 2, 3, 4, 6, 8, 9, and 10, but these 2 trades right here actually took you net negative. You lost 5 times the amount you were making on the other days. That's a recipe for disaster, and the stats prove it. Let's look at another one. 30%. Looks lousy. I guarantee you, if I said, hey, Joey, Billy, Bobby, I've got a 30% win rate system, you guys would be running for the hills. You had losses on 7 trades 1, 2, 4, 5, 6, 7, and 9. You won on trades 3, 8, and 10. But you actually came out with a small net gain. You made money. Is this making sense to everybody? Let's look at 60%. Sort of mid expectations. Not 30, not 80, but 60%. You lost here on trades 2, 4, 5, 7. You won on trades 1, 3, 6, 8, 9, and 10. Win rate was 60%. You came out with a net gain because you had favorable risk to reward. Now, I'm going to tell you guys, 60% with a 2-to-1 risk reward is very, very attainable. Let's look at a real market case study. Let's say in this stock, we were looking to enter right in here, middle right here, because that's what the data is telling us. Here, these averages, 10, 20, 30 years, have historically made a bottom, and we've gone higher. Pretty good stats. That's what the data is telling us. So let's say we frame the market, we determine a high probability, low risk entry point, but does the trade meet our risk reward criteria? Let's say that we're going to enter down here. Let's say the price of this stock is $100 and my risk is 5% or $5. If my software is telling me my average performance is 10%, I now have a 2-to-1 risk to reward ratio. All things else considered, I trust the process and I take the trade in confidence. Now, up to this point, we've covered quite a bit. I suspect the reason you're here, the reason you're listening to me is because perhaps you're sick and tired of being at the right place, but at the wrong time. Or even worse, maybe you ended up at the wrong place and the wrong time, a double whammy. Could you benefit from being and from using a trading compass? Could you benefit from knowing what market to trade, what direction to trade in, and how to time your entry and manage your risk? Do you see how you could benefit from using the power of a checklist? Do you see how you could benefit from the power of using technology? Are you starting to see why we should all be reaching out and smashing the easy button? If you knew the days of the week, days of the month, the exact time of the year where there's likely an extreme high probability of a significant turning point in the market, the average performance of that market and the average risk or drawdown that could occur, would that give you an edge? It's physically impossible to do this by hand. And why would you want to when you can take the equivalent of an 8-second bull ride to find the highest probability turning points in any market? Because we trust the data, because the data does not lie. Just like here, this forecast here. You've got years and years of fundamental data telling you in full color display the most significant tops and bottoms across hundreds of markets. You continue to stack the odds on your side over and over by having the knowledge most traders dream of. Not only knowing the trade day of week or the trade day of month, but also knowing the best months to be positioned, the performance expectations, data you simply cannot make up. How about volatility? This is an option trader's dream, knowing how volatile a market is or can be historically. High volatility, we look to sell options. Low volatility, we look to buy options. Giving you all of the data you need to make data-driven decisions at your fingertips with literally the click of a mouse button. So I want to recap what we've learned so far. So far, we have learned what to trade, how to determine direction, how to time our entry, and how to manage our trade using a proper risk to reward structure. Now I want to put this all together. What if you could do all of this in 5 minutes or less? What if your typical trading day was more like this, where you pour your hot cup of joe, you enjoy breakfast with your family because you've just banked $4,500 on a long TLT position. Now you could continue to wash dishes by hand, manually scour through thousands of tickers, and search hundreds of websites for the so-called latest hot stock tip. But why would you? Why would you when you can hit the easy button? In fact, speaking of easy buttons, I actually want to go into the software itself. So I'm going to pull over the software and I want to first off, can everybody see this? Can everybody see the software before I start the timer? I'm going to pull up a timer so you can see how little time this process takes. Can everybody see this before we begin? All right, excellent. So let me find my little timer. Uh-oh, there we are. So we're going to pull up a timer, and I'm going to put a 5-minute timer on this, and we're going to hit start. So let's go through the process. We're going to go to our algo rank scanner to locate our top 5. We're going to come down here, locate our top 5 in order from highest probability, lowest probability. First one we see is the trade desk. Let's go over here. Let's click the drop down analysis, and you can see your equity curve if you invested $10,000 of buying the trade desk every year in February. The last 10 years has an average performance of 19.75%. Success, 100% success rate with a max drawdown of about 15%. Okay, data looks good. Let's take it a step further. Let's pull up a chart of the trade desk and do a quick analysis. Let's frame the market to see if it makes sense considering a position given where the market is currently. So what we're going to do is go to a higher time frame, and what we're going to do is locate, as we can see here, we've got high probability demand zones, high probability weekly demand zones. We can take a trend line tool, and we know that we are gearing up for a high reward, low risk trade, because where we are looking to get long, our risk is right below here, and our targeting up at the swing highs. That's a minimum 1.5 reward versus our risk. Looks pretty good so far. Let's take it a step further and look at the seasonality. If we look at the seasonality of the trade desk, we can see here over the last 7 years that this market typically tends to go higher during this time frame or the month of February. We can see the seasonality of it. We can see the percent of positive months, the average monthly performance, as well as the volatility and our equity line. If we want to dial up another notch, we can then go into the trade day of week, as well as the trade day of month to time our entry. If we are looking for a bullish position, don't we want to enter on the down days? If we are entering a bearish position, don't we want to enter on the up days, the strong days? Yes, if you want favorable risk to reward. Let's go to our timer. Where are we? We have taken about 2.5 minutes for that demonstration. So I'm going to stop the timer. I'm going to go back to the slide. There you have it. Does everybody see how we just found a high probability trade in under 5 minutes? Leaning on the power of technology. I'm going to bring up or ask again. I want to ask another question. Do you see how using a checklist can help you find better trades in less time to potentially make you a more profitable trader? Enter yes or no. It's a very simple question and a very simple answer. Your 5 steps to the trade: use technology to find your top 5 markets, determine direction, frame the market to time your entry, and then we're going to manage our risk, manage the trade. It's not complicated, folks. Now, here's how you can find more trades like these. I want to share with you how to find trades like this every single day, and that's why I'm extremely pleased to introduce Trend Insider. I have just demonstrated in real time how anybody with a computer and internet connection can locate winning trades in less than 5 minutes. And I want you to be able to do this starting now with Trend Insider. This is our proprietary market scanner dashboard that gives you access to the algo rank screener, best trends analyzer, the predictive forecast modeling suite, and interactive charting. Everything that gives you the easy button inside the market. Total value of this scanner and dashboard alone is $19.97. I want you to imagine When you log into your Trend Insider Hub and locate trade opportunities such as this, here we are in Walmart. Things not looking rosy, but our Trend Insider is predicting a bullish turning point. A bullish turning point, and Walmart rips 17.5% higher. Back to Walmart again. Everybody late to the party, jumping on board. Kramer's making recommendations to buy. The breakout artists are buying, but we aren't. Why? Because Trend Insider is forecasting a major top looming around this time period. And guess what? Walmart makes the top and tanks 24% in a matter of days. We literally just rode this trade to the upside, cashed out, and then went and rode it to the downside. While all the people that were buying up here, chasing premium prices, were left holding the bag. iShares, emerging markets, EEM. This one down over 30% for the year. Your trading colleagues would say you're insane to be buying this market. But we can confidently consider bullish positions because we trust the scanner, the data, the entire process. And this is what happens. EEM rallies 23.5%. Now, as part of this package, I'm also going to share with you a day trading strategy, a 997 value, and a swing trading strategy, a 997 value. You will not find these strategies anywhere else, nor have I ever shared them. They're exclusive to Trade Insider members. That brings the total value to over $3,900. The Trend Insider plus my two never-before-seen strategies alone will help you find and capitalize on trades like this in FDX. Here's what the data is telling you, and FDX rallies 13%. Vornado Realty, again, the data is telling you we're making a short-term bottom. Vornado rallies 22.7%. Dollar General, why would you be looking to sell right here? Because that is what the Trend Insider data is clearly telling us. And Dollar General makes a top and sells off 11%. Now, you're not only getting the Trend Insider dashboard and scanner, the day and swing trading strategies, you're also going to get my top 5 weekly alert picks, my 7-day playbook, and my trade entry checklist, plus access to my private Telegram room, a total value of over $9,600. By utilizing the Trend Insider, the top 5 checklist, you're going to get live market sessions, live market analysis, my playbook, plus all of the other resources I'm including. You can now swing trade in confidence, because you could have, with confidence, begin to accurately and methodically position your trading, your retirement accounts, the family money you may be responsible for managing, by knowing these key turning points in the largest market, the S&P 500. A quick 20-year analysis on the S&P, where you're basically seeing and given the roadmap for the entire year before it even begins. The Trend Insider predictive forecast model using the last 20 years of data, as you can clearly see, forecasted major tops and major bottoms here in the market. We don't care what the so-called experts are saying out there. Let's see and look what happened at these points in the market as they played out. Here you are in green, the current year. I don't know what about you. I would say this has pretty much followed itself to a T. Imagine being able to take back your retirement accounts, your IRA, your 401k, by having the data tell you when you should be essentially moving to cash or double dipping and maybe even going short. You're shaving years of lost opportunity from the negative impact bear markets can do to long-only accounts. Here we are playing out in real time, just as it did over the last 20 years. Can you use this to day trade? Yes, day traders can use Trade Insider to know how to be positioned on exact days of the week, days of the month, which days have the highest odds of trading higher or lower. If you knew where those significant tops and bottoms were in any market on a specific day, don't you think you can use that data for your daily directional bias? And by knowing the trade day of week and the day of month performance expectancy, this is real data that you can use in real markets. if you traded a single contract of the S&P at these cycle tops and cycle bottoms, 5 turning points, 5 opportunities, it's just over $78,000 a single contract. One market. The data and the charts speak for itself. Now, if all this did was prevent you from jumping into the market at the wrong time by placing losing trades and actually taught you what to buy and when enter the market at the right time, if all this did was afford you the ability to make highly accurate decisions about trend, what market to trade and where to enter, would it be worth the investment? Would it be worth the investment to locate, analyze, and execute setups like this in crude oil? One turning point in a single market can change your lifestyle. How about this in the 30-year bonds? Predicts a near-term top on Jan 31. The market has moved a full 5 full points or handles, or $5,000 a contract. Equity options traders sold TLT or bought TLT put options. Traded the 30-year, traded the 10-year note. You can see why this is worth every penny at $9,600. The scanner alone is sold for $19.97. But today, for the first 25 members for attending the Synergy Traders Workshop, you can get started today by going to TradeOutLoud.com/synergy. I'm going to recap everything that you get. We're limiting this to 25 spots. Why? Because we want to control the user experience. You're going to get a personal onboarding call with my customer support specialist so type in your number to lock in your spot, or you can go to TradeStreaming.com/synergy. You're going to get the Trade Insider dashboard and scanner, Trade Insider day and swing trading strategies, my top 5 weekly alerts, 7-day playbook, trade entry checklist, 8 weeks of live market analysis, not 4, and access to our private Telegram room for 97 cents. This is good for the first 25 members. You can get 30-day access by going to TradeStreaming.com/energy. My team and I want to ensure you hit the ground running with the Trade Insider, so we can only take 25 slots at this time. Now, after you go and secure your spot at the website, TradeStreaming.com/synergy, you're going to get access to everything that is included here. I have shown you that I am serious about your success. So here is the offer once again. And I'm going to take a moment here and answer some questions, and we can go back and take a look at the software. Yes, this will renew after 30 days. If you do not want to renew after 30 days, you have the option to cancel. You get a full look under the hood at the software once you get inside. Yes, it does work for futures and Forex. So these are the markets that we have. We have over actually 4,000 instruments. You can see we have all of the major indices. We have all of the major futures groups: indices, grains, rates, meats, softs, energies, metals, and currencies. Forex markets, key sector ETFs, global ETFs, a list of popular stocks, but then you can come in and type your favorite symbol. So this is, we have 2 scanners inside of the platform. You have an AI generated scanner, and we also have a best trends, which is based off seasonality. So we have markets that go back up to 50, 60 plus years, depending on the market. So if we can come over here and we can say, okay, I want to look at, say, crude oil. We can look at crude oil. We can come over to the seasonality. You can customize your own data sets. You can customize your own data sets here in crude, going back and choosing any data overlays that you want. By default, we have 10, 20, and all years of data selected. And here are the expectations. And what we're looking for are high probability cluster turning points. So if we want to say hide this year, and maybe we want to hide the last, say, 20 years, maybe the last 10 years, we can see this going back to 83. I would like to put the 10-year overlay. Okay. I'd like to maybe put the 20-year overlay. We can do that. We can see the percent of positive months as well as the monthly average performance. If I know that the monthly average performance is weak and we have seasonality that's pointing higher, I'm looking for long positions. If I know that we have strength with the next month or following month's week, I'm looking for sell opportunities. I use this on stocks. I use this on ETFs, indices, futures, and even currencies. If we know that certain months have higher volatility, I'm looking to sell credit spreads. I'm looking to sell options. Lower volatility months, I'm looking to buy options. Okay. And so many different tools inside here. We've got resources, tutorials, the 7-day playbook. This is designed to get you from placing your first trade within 7 days, an exact walkthrough of me using the software A to Z. It's not complicated, guys. It's not complicated. You're going to get 2 trading strategies as well. And we look forward to seeing your success. One thing I'll wrap up here is you're going to get also access to our live weekly sessions. We have those every Thursday at 11 a.m. Eastern. So you'll be you'll get an invite to this Thursday's session. So that is all for my time right now. I want to say thanks to David and the Synergy Traders Workshop team for having me on. Always a pleasure. If you have any questions, you can email support@TradeOutLoud.com. Good luck in your trading, and I wish you the best of luck. Take care.